Hi everyone, welcome back to our channel. So in this previous video about buying a Tesla, we talked briefly about investing in real estate. So there are two ways that we have been investing in real estate. One is being active investors by owning rental properties. Two is being passive investors by investing in real estate syndications. So in this video, we'll be talking about the latter. We will touch base on our investing background. We will talk about what a syndication is and what are some of the deals that we have invested in. And then we will end with the pros and cons of investing in real estate. So a little background. We used to invest 100% in the stock market. However, after talking to our more successful friends and mentors and doing our research, we realized that in order to retire earlier, we would need to add real estate to our investing strategy.
It also meant that we would need to be a little more hands-on with our investing, but after doing our own research, we were okay with that.
Okay, so let's start with what is a real estate syndication?
All right, well, put simply, a real estate syndication is when a lead investor identifies a property and then raises a sum of money from other investors to go purchase that property. And then at some point in the future, when that property is sold, any profits are split between the lead investor and the investors that he or she raised money from.
Okay. And we have so far invested in 7 deals. Can you tell our viewers, like, what are some of the deals that we have invested in?
Sure, I'll give 3 examples. One is a 12-unit property in Oregon. That's the smallest one we've invested in to date. Another is a 403-unit property in Louisiana. That is the largest complex we've invested in to date. And then we've also invested in a fund structure, and that fund went out and purchased 8 different apartment complexes across the southeastern United States.
Okay, so now that we know what a syndication is, let's talk about the pros and cons. Would you like to start with the considerations of a real estate syndication?
Yeah, one primary consideration is that these things are highly illiquid. By that I mean the hold period for these things can be 5 to 7 years. Some of them can be even longer. So, if you need your money at any point in time, you can't dictate, when an investment is sold and when you need to get your money back. That is completely out of your control. And even if you wanted to sell your interest in the investment, you might not even be able to do that.
Okay. Now, besides locking up your capital for a long period of time, you also need to have high minimum investment amounts.
Right. So the lowest we've seen a minimum set is $25,000, and honestly, I've only seen that one time. Everything else I've seen is $50,000 to $100,000 minimums.
Okay, so we currently live and work in California, but all of our deals are across state lines. So how does that affect tax returns?
You may end up filing multiple state tax returns in the future. For example, we have a property in Louisiana. In the future, when that property is sold and there is a gain and income, the state of Louisiana is going to want its share of taxes from that income. So we'll end up in that scenario having to file both in the state of California here and in the state of Louisiana.
Yeah, that makes sense. What about K1s?
Apartment syndications like this will produce an IRS tax form called a K1. And what we found is the timing of receiving those K1s from the lead investor and their accounting firm varies significantly. Oftentimes they come in really, really late. And this year, as an example, we had 1 or 2 come in so late we had to file for an extension with the IRS. And we actually just ended up filing our taxes recently.
Like last week. Yeah, that's crazy.
I touched on this a little bit when we talked about the illiquidity of the investment. But here, if you want to have any sort of say in day-to-day operations, this is not the investment for you. You have zero control over what is done day to day, and you have zero control about when the asset is sold and what it is actually sold for.
Right. I mean, with these deals, like these operators send us like monthly updates, right? But then otherwise, like we don't get to make any decisions at all. Okay, so the next consideration to think about is the fees and compensation structures can be complicated.
Okay, so fees and compensation structures, you would find those from reading the investment's private placement memorandum. And as you read that, you'd see things like asset management fees, property management fees, disposition fees, and how distributions in the form of dividends or the eventual sale and proceeds would be split between the lead investor and the group of investors. And you'd have to really be able to navigate that PPM and understand it and translate it into a scenario where you could see how the cash flows could go, likely in the form of a spreadsheet.
Yeah. Another challenge of real estate syndication is that it's difficult to diversify.
To diversify in the stock market, you can do so very quickly and cheaply by just buying a handful of shares in different sectors or just an index fund, and you'll quickly be diversified. But in the syndication world, if you needed to diversify geographies, for example, you need to buy more than one. So if you try to buy, for example, 4 or 5 syndications, that could get very expensive very quickly.
Right. I mean, we invest in 7 deals, right? So for example, let's say a minimum deal was 50 grand. So that's basically $350,000 just for like 7 geographical areas.
Right.
So it's tough. Last but not least, it's very difficult to get information about these deals so that you can compare them.
Right. You can go to each individual opportunity's website because every single one of these has a website. But the information you'd find there is very limited, and that's by design. The SEC primarily wants only accredited investors to invest in these types of deals, and so that information is locked behind an information wall and only available if you get access after being verified as an accredited investor.
Okay, so let's pause a little bit and talk about being an accredited investor. How does one become an accredited investor to invest in these deals?
Well, there are 2 ways that you can become an accredited investor. One, you need to have income of $200,000 by yourself for 2 consecutive years, or have income of $300,000 between you and your spouse for 2 consecutive years. Or the second way is to have a net worth of $1 million or more, excluding your primary residence.
Okay, why do you think that is?
I really think it's for investor protection that the SEC has done this. If you think about it, $50,000 is a large sum of money, and if you're not making a large income and you don't have a large net worth, losing $50,000 could be very detrimental to your financial situation.
Right. All right. Now let's talk about the benefits. The one thing that we always hear in real estate is tax deductions.
So like any other real estate deal, these syndications take advantage of depreciation, and that can be very beneficial for your personal tax situation.
Another benefit of investing in real estate is leverage.
So just like you'd use a mortgage to purchase your personal residence, you use bank debt to purchase one of these syndications. So as an example, one of the lead investors purchased a $15 million property, and he used a $10 million loan from the bank and $5 million of investor money. So the investors were able to go purchase $15 million worth of real estate just with $5 million of their own money.
Yeah. Another thing that I like about real estate syndication is that it's truly passive.
Right. So after you've done your upfront due diligence and made the investment, there's really nothing for you to do. You don't get to decide on day-to-day operations like we mentioned before. So that means you're not looking for tenants, you're not screening them, you're not dealing with vacancy, you're not dealing with rent collection, evictions, CapEx, unit turnover, none of that. It's really up to the lead investor to manage that, and you just sit by and watch.
Right. It really saves a lot of time. One thing that we like is receiving distribution checks.
We receive quarterly distributions when they are available from these properties, and it's truly the mailbox money, and we're huge fans of that.
Yeah. All right. So hopefully you enjoyed listening to our insights about real estate syndications. And until next time, please like and share our videos. And if you haven't already, please subscribe to our channel and help us grow our channel. Until next time, bye.
Bye. Thank you.